tomorrow, Bernanke will make a speech that the financial markets have been waiting for. He'll discuss the economy from Jackson Hole, Wyoming, and investors are listening very carefully for any hint that the Fed will take more steps to boost the U.S. economy. With us now is Greg Peters. He's the head of global fixed income for Morgan Stanley. Joins us from his office in New York. Greg, welcome to InBusiness. You say set your expectations low for tomorrow. You don't expect quantitative easing.
No, I don't. I actually think the markets are really set up for failure here. In fact, there's more hope around Bernanke's comments than anything else. We're just not expecting a lot, coming out of his speech at 10 o'clock tomorrow.
Not expecting a lot. Do you think that the Fed will make some changes, or that something will happen after the president gives his job speech on September the 5th? I mean, are we going to see something, just not see something this week?
Here's a bigger issue. The bigger issue is that we need to have a coordinated policy response that's not just coming from the central bank, but actually coming out of the administration. So we need monetary and fiscal policy working in concert together. And that is a very tall order at this point in time. So I think for investors to expect a silver bullet or a soundbite to come out of Bernanke on Friday just is really not assessing the situation properly. And even if a plan is laid out, I'm not convinced that investors will look at that plan and say that's enough. So to me, it's a very long, hard road here that's really dependent more on the fiscal side than on the monetary side.
Well, there's also a lot of anticipation of what we're going to hear from the head of European Central Bank. Trichet will also be making comments. And I know that you say one of the upside risks for the market could be decisive action to provide liquidity for the markets. What is it that you think the markets truly do need on a global scale?
Well, it's the same thing I said prior. We need a concerted effort here, and the ECB and the European situation is arguably in much worse shape than the U.S. So it's magnified. So the U.S. we're just wrestling with one sovereign. The euro crisis is 17. So just getting a coalition around that is much more difficult. So really, my punchline is quite simple. Is that this is a really long, hard road,
yeah.
And there's no quick fixes, and policy is slow to develop, definitionally, and so this is going to take some time to work itself out.
Greg, I want to quickly ask you, we're seeing the markets in Germany down more than 2% right now. That's the equity side of things. Are you seeing heightened stress in the credit markets, and should we be seeing this level of worry about Germany right now?
Absolutely. So the credit markets really haven't been functioning well the past couple of weeks, and that's really quite concerning. And so there's been pretty much a price vacuum. A lot of it is August related, so maybe we don't want to make too much of it because it is late August, so we'll get a better read come September. But what worries us is the fact that the credit markets don't appear to be functioning, at least from a secondary standpoint, all that well. So I don't want to make too much of it right now because it is late August. But come September, if we don't see a meaningful repair in secondary credit, then I think that's a negative signal for sure.
All right, Greg Peters, always good talking to you, head of global fixed income for Morgan Stanley.